full day programs are included, and regional conference which is scheduled on 19th and 20th of December is also included. So those of you, we have got a very good response for the annual membership. Those of you are interested can join the annual membership scheme and be part of the annual member. Members, our upcoming programs today we are already discussing on the common errors. Then on 16th we are having a seminar on there are three topics, three upcoming companies amendment bill which has been sent to JPC now. So we are discussing that there are major amendments in 109 section in LLP and Companies Act. So that we will be discussing on 16th. Along with that, we are also discussing on G State step-wise process how to file appeals in G State, and again transition provisions and major overview of Income Tax Amendment Act 2025. This is the seminar on 16th. 17th again we are having a program at Center of Excellence that is on global opportunities. Like those of us who would like to practice for global to be a global accountant, we are having a very good program, full day program at Center of Excellence, where we are bringing in experts who will take us through how we can venture it. We will start with that how a new person can venture into a global practice. Then we have kept two dedicated sessions of 2 hours each, that if you would like to practice in Australia, what are the technical knowledge we have to have and how to go about, and then for USA also we are having, and then we'll be having a panel discussion. This is 17th. 18th again at COE only we are having an AI workshop. This is an advanced level AI workshop. Friends, you all know after November 2022 things have changed around the world. ChatGPT was launched, and then we have seen a series of GPTs and AI software are come, and many members are now using it. At all India level, ICAI has completed more than 600 AI batches, level 1. And at Calcutta, we have completed 40 batches of level 1 and 3 batches of level 2. So members are now aware about AI and they are using it in our day-to-day practice, in day-to-day work. Now members want something advanced. We come across many members who are developing softwares, bots themselves. But then there is a problem. They are not able to convert it into products. They are not able to launch it so that third party can use it. They are not able to make it sellable. So this program on 18 is dedicated for this purpose. I welcome Hariramji. Hariramji, kindly join us, guys. So this program is dedicated for that purpose, that we can take our findings and our research to an advanced level where we can launch these products in the market also, and we can make it a sellable product. Then on 23rd, 24th again we are doing a refresher course here only at our Singhi Hall on accounting standard with respect to SMEs. And then 25th we are celebrating the accounting standard day. There is a program at HHI entire that is focused on and in and around account Ind AS, and then specifically insurance sector has been implemented, and I think auditors of the insurance sector have to report about with 117, 118 in the first quarter only, which is coming. So more related to first quarter 117, 118, but a detailed discussion about other Ind AS also will be done on 25th. And then first, second, third, though registration are closed, few of you, if interested, we can try to make 2 or 4 vacancies. We are having our first RRC at Jaipur on GST. We have received tremendous response. Around 60 of the professionals are joining there. 3 days of marathon group discussions. We have identified 15 case studies we have prepared, and there will be a group discussion, and this 3 days RRC will be followed by a national conference on GST. We are planning on 15th and 16th of May at Calcutta, where all the findings of this group study will be discussed with members at large. G State All India President will be joining as the chief guest. We are also having officials from GSTN and NIC who will be taking us through the GST portal, GSTN portal, and then there will be a dedicated help desk from GSTN who will be helping us if we are facing any problems in filing GST appeals and any issues, one-to-one issues will be resolved in this national conference. So once again, thank you everyone for joining our program, and these are the upcoming programs. You can visit our website also for details of all this program, and those of you who are interested can be part of this. Thank you everyone for your patient listening.
Thank you so much, CA Mayur Agarwal ji. Now I would request CA Hariram Agarwal ji, our Vice Chairman, to come on the dais, please. Now I am going to give you a brief about our first speaker, CA Srenik Mehta ji. CA Srenik Mehta ji is a fellow chartered accountant qualified in the year 2003. He has done BCom honors from Calcutta University and has received certificate for IFRS implementation. He has joined Singh & Company in the year 2013. He is currently serving as a senior partner at Singh & Company, where he is responsible for leading the statutory audit and assurance department. Prior to Singh & Company, he was associated with Deloitte for nearly 9 years. Now I would request our Vice Chairman, CA Hariram Agarwal ji, to felicitate CA Srenik Mehta ji with Uttreyo. Now I would request CA Mayur Agarwal ji, our Chairman, to felicitate with the memento. So as we all know that today's topic is common errors in AS, that means accounting standards, standards on auditing and financial statements. So now I will be handing over to CA Srenik Mehta ji for giving us insights on the today's topic, common errors in financial statements with respect to AS and SS. With this I would like to hand over to Srenik Mehta ji.
Srenik sir will be discussing on common errors in financial statement.
Good afternoon, everyone. Thank you so much. So at the outset, I would like to express my sincere gratitude to ICA Kolkata branch and CA Mayur Agarwal for giving me this opportunity. Today's session is on common errors in financial statement. So I'll be discussing on this disclosures, the common errors in financial statement relating to the disclosures as per accounting standards and schedule 3. Friends, let us discuss what do you mean by the common errors. See, common errors in financial statements. We'll be discussing, primarily the responsibility of the financial statement. Whose responsibility is to prepare the financial statement? It is the management responsibility. The second responsibility starts with the auditor to review the financial statements and to see whether the financial statements are true and fair. So there could be possibility that when management is preparing the financial statement, maybe because of not updating on a day-to-day basis or maybe for other reasons, may not have come out with appropriate disclosures which should have been there in the financial statements. And there could be a possibility when auditors review the financial statements, there could be possibility auditors also might skip those disclosures which should have been there. So now what comes next? If it is being ignored by both the management as well as the auditor, then the question of the regulations comes into the picture. See friends, we all know that behind us all regulators are there, whether it is MCA, SEBI in case of listed companies, FRRB, who are also now going to who are also reviewing all the financial statements, and of course NFRA for this Ind-AS client listed clients. So today's agenda is that, so in this workshop I'll just try to cover this, why disclosures errors are critical. Number one, we'll be discussing on the common errors in disclosures as per accounting standards. So friends, what I have done, I have tried to pick up some of the disclosures, but my only sincere request is that let us not restrict to this. These are the common errors which have been recently found by FRRB also. I am also part of FRRB. We are also reviewing accounts. So based on my experience and knowledge and based on the information which was available in FRRB, we have tried to gather some of the common errors with respect to this accounting standards. And next, common errors in financial statements as per Schedule 3. We'll be disclosing the balance sheet errors, profit and loss errors, errors which probably you will find in the notes to accounts, and conclusions and takeaways. Before starting this session, my only sincere request to everyone, let us make this session very interactive. Otherwise, I don't want me to be a speaker on this side. In case if you have any queries, anything, you please come back to us and please discuss. We'll be discussing on real-time basis. We'll not wait for the end of the session to discuss all the errors. Oh, why disclosures errors are critical? See, we all know accounting standards are mandatory, not an optional for this. That we have to understand very clearly. Schedule 3, there is a prescribed format given by MCA, which also they also amend on a regular basis. If you remember, previously there was a Schedule 6, then revised Schedule 6 came into the picture, then Schedule 3 is there. Again in Schedule 3 also, MCA came out with amendments in 2021 and 2022 also. In 2021 they come out with CARO amendments, and 2022 they come out with additional disclosures where management is also certifying in their notes to accounts by way of additional disclosures, and we are also certifying in our CARO. As I said, MCA, SEBI regulators are there behind us. If we as an auditor do this mistake, then we have to be penalized for that. There is no option available for that. So we have to be very vigilant when we review the accounts, because to my knowledge, because you know, probably you will find when you are going to review the accounts, in some of the cases you might get a very less time to review those accounts, because management always try to come with the financial statements maybe before finalization, maybe few days before the finalization of the accounts. So the only, you know, how to become, you know, to save us, rather I would say we have to be vigilant, and we have to be certainly sure that whatever disclosures made by the management in the financial statements, irrespective, it starts from the accounting policy, balance sheet, profit and loss account, notes to accounts, are true and fair. And yes, last, if there is a non-disclosure, so there could be possibility where management says, okay, this is not required. But when we discussed as an auditor, and when the debate comes into the position, then there could be possibility that we might have to come to the conclusion that we have to modify our audit opinion. So this situation has also come up. Part A, accounting standard disclosures. Every AS prescribes specific disclosures in notes to accounts. We all know there is an accounting standard. For every accounting standard, there is a disclosure which have to be there in the financial statements, and that is a part of your notes to accounts. You can take any examples, whether it is fixed assets, whether it is investment, whether it's inventories, all. Apart from this balance sheet and profit and loss account, disclosures are there. You can see any accounting standards, on the last the disclosures are given. So as an auditor, what normally I do, I'll tell you, I'll give you the practical case. See, it is not possible for us to, you know, remember each and everything. So what normally we do, whenever we go and review the financial statements, we always try to open the books and see that what are the disclosures, whether any disclosures have been missed by the management in the financial statements. Then we start going through, because we as an auditor, we should have a checklist of each disclosures. If we have a checklist of each disclosures in notes to accounts schedule 3, then the possibility of errors could drastically go down. Auditors are required to report omission of ACE disclosures under CARO. Yes. Under CARO, specific ACE disclosures are there, which we will have to certify by getting or obtaining evidence from the management. Like take an example of the physical verification of property, plant and equipment, inventory, loans and advances. Lot of disclosures are there. That is also relating to your accounting standards. Non-disclosure of related party transaction attracts special scrutiny. This is a very important case in case of listed companies, where SEBI also, minutely, review the accounts and especially the AS18 transactions. That is, that whether any related party transactions have been skipped out by the management in case of listed companies. Part B, Schedule 3. This, my apology, this should be Division 2 for India's company and Division 1 for ACE company. My apology for this. So it is wrongly mentioned over there. We all know Schedule 3 mandates extract format of balance sheet PL. The format is there for balance sheet, profit and loss account, and for notes to accounts, we have to see the additional disclosures which is there. Some of the disclosures are there in the accounting standards. Some of the disclosures there, MCS come out with the additional disclosures in 2022, which which management also have to, mention in the notes to accounts. Coming to accounting standard disclosure errors. Friends, before, let us come out with the practical situation. When I, being an auditor, start review the financial statements, the first thing, what I ask to the management, show me your accounting policies. Where is your accounting policy? That is the main, accounting policy. I would say it's a backbone. It's a backbone of the, entire financial statement. Because, the investor, the regulator, whosoever review the financial statement, the first thing which they see the accounting policy. Why it is so important? Because this accounting policy spells, or accounting policy, basically it's a mirror of the accounting entries done by the management in the financial statement. Like in case of inventory, whether it is FIFO or weighted average, cost or NRV, fixed assets, depreciation, whether WDV method or SLM method. So these things have to have mentioned in the accounting policy. So lot of accounting policies, but as an auditor, we have to be very sure that the accounting policy mentioned by the company is correct or not. We have to minutely go through each and every accounting policies with respect to whether it is relating to revenue recognition, or maybe for contingent liability, or for property, plant and equipment, or investment, or so on. We have to be thoroughly reviewed each and every accounting policy. Because I have seen in some of the cases where company is following depreciation, charging depreciation on SLM basis, but it is wrongly mentioned on as WDV basis. The only one reason is because of copy paste. I have seen in some of the companies, they simply take the, annual reports of the peer companies and simply copy paste their accounting policies and, just attached with the notes to accounts and financial statements. So, as I said, change in SLM to WDV without disclosing reasons. Yes. So, there is one thing which the common errors which we have found. Suppose in case company has changed the accounting policy from SLM to WDV. That means it is a change in accounting policy. Then we have to refer the accounting standard one with respect to change in accounting policy. The standard says that if there is a change in accounting policy, it has to be on retrospective effect. The effect has to be given in the statement of profit and loss, and appropriate disclosure is also required in the notes. That the had this accounting would have been followed on the earlier method, what would have been the impact on the day one, then what would have been the impact in the profit and loss account. That adequate disclosure is required in the notes to accounts. So normally we have seen in common this errors, this is one of the common errors what we found, that some of the companies changed their accounting policy from SLM to WDV, but they did not disclose the reason for the same, and even nothing was disclosed in notes to accounts. Next, incomplete misleading disclosure. Estimation basis for provisions not disclosed. We all know in accounting policy we have to mention, the management will have to disclose the estimation, significant judgment and estimations. Wherever they do the significant judgment and estimation, that has to be disclosed in the notes to accounts, and that is mandatory. I'll tell you, in some of the cases we saw the balance of deferred tax. The management recognized the deferred tax assets, because in accounting standard it requires a virtual certainty. So that requires a significant judgment, correct? But that was not mentioned in the accounting policy. The accounting policy was silent with respect to deferred tax. Coming to next, with respect to depreciation, that company was an asset-based company, and the depreciation was also, they were charging depreciation on WDV method. So that was also not mentioned on the significant estimates, because huge, I mean, you can take provision for bad debts. I'm not discussing in Ind AS, we come to the ECL model, but in case of accounting standard, the common errors, if you see the huge provisions is coming with respect to bad debts, then that is the area where significant estimates and judgment comes into the picture. In that case, the management should disclose the entire the para with respect to this in their accounting policy. Next, your income tax. Lot of litigations are there, contingent liability. So these are the examples of, significant assets and judgment. Yes, sir. Can you give mic to them? I mean, sir, just 1 minute, sir.
Thank you. Am I audible now?
Yes, sir.
Sir, this is for curiosity only, that significant judgment, as we are telling. Suppose an organization is actually...
Could you please speak louder? I mean, it would be...
Organization.
Yeah.
An organization is actually doing some estimation on gratuity provision. And for that, they are taking help of actuarial valuer. So in that case, the process being actually followed by the actuarial, they provide the data, and then we are based on that, we are creating the provision for that amount, right? Gratuity. So in that case, what will be the disclosure in the notes to accounts for this purpose?
So you are talking about the significant estimates and judgments?
Yeah, I'm actually.
Yeah. So let us think, you being a part of the management, you have given your entire working to the actuary, and you have told your actuary, you please give me the actuary valuation report. Actuary gave you the X amount of figure, and you mentioned in your appropriate accounting entries have been made in the financial statements, and you disclosed there in the notes to accounts. The notes to accounts requires that in case of gratuity, you have to disclose the entire disclosure that accounting standard says. But coming to the significant judgment, if your judgment is large, which I would say the amount of gratuity provision is so material, then you have to disclose those as a significant judgment. You have to mention that this area where the actual judgment is required. See, primarily responsibility lies with the management, because if you see, I'll tell you on the back side of this, instead of why this significant judgment is required. Because it is the management who gives the data to the actuary. Actuary simply does the calculation, nothing. And they normally take the discount rate which is there in the market, correct? Like lot of data is there. Lot of factors which you can take the salary escalation clause. This is one of the thing where significant judgment is required. So normally whose responsibility is to see? It is the responsibility of the management to provide the salary escalation clause to the actuary, and based on that actuary does this calculation and give the final figure to the management. So yes, this requires a significant judgment and appropriate disclosure is required in notes to accounts.
And here appropriate disclosure means we just mentioned that we have depended on the valuation done by the valuer, actual valuer?
No, not dependent on the way. See, again, what I said earlier is that it is not the, see, I mean, actuary can give you the data. They are the expert. But finally, responsibility lies the management. So again, I'll tell you why this important, why this disclosure is required. Because, you know, when the user, if an investor want to invest in the in this company, as an investor, I should be doubly sure where are the significant estimates done by the management. What are those areas? Like take an example of investment.
Okay, I got it.
It is in cost or NRV. This in gratuity. So the investor will go through this this disclosure pertaining to gratuity, where entire things have been disclosed appropriately. Your salary escalation clause, your discounted rate, and everything is mentioned over there.
Thank you, sir.
Yeah. Yes.
Estimation and provision has been done.
Yes. So, if you see the financial statements of any listed company, any annual report, sir, you will find the accounting policy starts with the basis of preparation, correct? Then the second para comes with the basis of judgment, significant judgment and estimations. You have to jot down all the points where the significant judgment and estimation have been made by the management at the time of preparation of the financial statement. Whether it is investment, deferred tax, income tax, contingent liability, or actuary valuation. So what, as in reviewer, what we observed here, that we saw a significant amount of contingent liabilities was there in the balance sheet, in the notes to accounts. But the company did not disclose those as a significant estimates, because obviously whether it is a contingent liability or actual liability, there is a thin line difference which requires a significant estimates. So that para was missing in their notes to accounts. So is this part is clear? Because this, so I have tried to, I have tried to cover some of the things probably, but we'll be discussing more than probably you may not find over here also. So this slide is totally, basically talks about the accounting policy. We should be thoroughly reviewed the accounting policy, and I'll tell you what I found that we should get ourselves appropriate time to review the accounting policies. Rather, we should ask management to provide the accounting policy well in advance, not at the time of review the financial statements. That should be, that is the, probably I would say that is one of the thing probably where, we can, minimize the errors, and in case if any errors we found in the accounting policy, we can highlight to them well in advance. Yes, one thing, accounting policies followed by the company must be consistently followed by the company. Consistently. Standard says you have an option to go SLM to WDV. Aaj SLM tha, next year I being a part of the management decided, no boss, huge profit, let us convert to WDV. Then I saw huge loss, let us go to STED. That is not permissible. Because standard says if you transfer from this to those, you have to give the reason. You have to give the reason why you have done so, why it is required. Whatever accounting policy followed, that has to be followed consistently. This is very, very important. Coming to AS2, accounting standard, the mandatory disclosures, what we found in some of the financial statements were often omitted. Cost formula FIFO weighted average not disclosed. Whatever method you follow at the time of valuation of inventory, that has to be disclosed in your accounting policy, whether it is cost FIFO method or weighted average method. It has to be disclosed over there. Carrying amount of inventories by category was not shown. Like inventory consists of your raw materials, WIP and finished goods. The breakup was not given. The breakup was not given, whether it was mentioned the inventory and the total figure was given. So the breakup was not there. Amount of inventory written down to NRV not separately disclosed. The standard gives an option that in case of slow moving, non-moving items, the company is required to make a provision, and if company is making a provision, that appropriate disclosure is required. That was missing. In some of the case, some of the items were bring down to NRV. So that also disclosure is required, that what are the items which is bring down to NRV. That was also missing. Reversal of prior year written down not disclosed with circumstances. In case if you can see in many of the listed companies, if company written down or if company write back the previous year inventory, because you know this provision normally made based on the estimation, maybe some percentage. So there could be probability next year you may find the reversal of provision which was made in the earlier years. Then in that case you have to mention by way of note that includes so and so amount which was reversed in the financial year. Any else, I mean, any other disclosure which probably you might to discuss with respect to inventory, anything on inventory? So these are the things which we normally saw that this was missing in the financial statements. There could be n number of things. Coming to revenue recognition. Sorry? Can you give this? Mic de dijiye na.
What's the main difference between inventory valuation as per income tax standard and accounting standard?
You are talking about the ICDS standard,
Yes,
which has come up?
and our
ICDS.
AS2.
There is a difference.
Is there any difference?
No, there is no difference. There is no difference. With
Because-
respect to inventory, there is no difference. But yes, probably you will find going forward, this is, okay, you please.
And yeah, just there is a component of that tax.
Nothing,
component.
nothing. So far as inventory, there is no difference. There is no difference. The objective is they have come out with some of the standards, but very soon, like they will be coming with rest of the standards in ICDS. The objective is just to align with them with the Income Tax Act. There is no difference as per inventory AS2 and ICDS.
Thank
Excuse me.
Yes, sir.
Regarding CARO and disclosures in the accounting statements, there has to be a parity and a reconciliation between whatever disclosed in the CARO and whatever is disclosed in the accounting standard. This is right, I presume.
Absolutely.
In certain companies, CARO is not at all applicable. So can we, by just presume that if those disclosures are not given in the accounting standards you're talking about in the main schedule, will it be acceptable by FRRB?
So if I correctly understood, taking one example, good question. So you said, let us take one example. In one of the company, CARO is not applicable. But with respect to inventory, the physical verification of inventory is required. Where CARO we as an auditor certify. But say if CARO is not applicable, do we require to follow that procedure? That's what you mean to say. Yes, we have to. So CARO is something where we are certifying as an additional disclosure. But all those things are, even if it is not there, even in some of the cases CARO is not there, but we are bound to apply those. I'll tell you one more example with respect to internal financial controls. There are some of the companies, for small companies, where even IFC is not applicable. Where as an auditor, we are not supposed to issue IFC report also. But does it mean that internal financial control is not applicable? That IFC is applicable. that is very much applicable. That controls has to be there in the company. That is required.
Sir, in case of a manufacturing company where some finished goods are become obsolete or dead stock, how to disclose those stocks, valuation and report, how to report those stocks?
So-
Normally company don't disclose such type of stocks.
If company don't disclose, and if as an auditor you know that those are dead stock, then you have to insist management to make a provision for that. Either they have to write off, first they have to bring down to NRV, correct? Those finished goods, they have to bring it down to NRV. And if management, you have to insist management that you please do this adjustment in line with AS2. And if management doesn't agree, then you have to make appropriate disclosure in audit report.
Thank you.
Yes, sir.
And the company's reply was, you are not technically qualified enough to understand what is dead stock and what is good stock.
No, it is their company. They have to have come out with a solution. They must have employed technical person over there. Technical person must be there in their plant also, sir.
Where I faced this difficulty, the company was pretty strong, but by the look of the stock, I could understand that it was not sellable anymore.
Sir, I'll tell you one of the example. If you go back in 1990s, in balance sheet inventory, we used to disclose as certified by the management. You know, that was there in Schedule 6. This was omitted at the time of revised Schedule 6, if I'm not wrong. That was the reason. Because as an auditor, if I am signing the financial statement, I can't say that as certified by the management. The responsibility lies with me. Although primary responsibility lies with the management. So, sir, answer to your query, we should always insist client to please make a provision for that. Otherwise, as an auditor, we have to deploy some technical person from our side. And we have to take, before giving opinion, we have to be doubly sure whether those are dead stocks or not. Because I'll tell you one of the example, without taking the name of this is the practical example I have found in one of the steel companies. Probably, they procured this iron ore, correct? So in that iron ore, when we went for an observing the physical verification on 31st March, what we saw, the fines was also there, iron ore fines. Just imagine the iron ore is valued at say for 8,000 rupees, but the fines may be based on great quality, could be valued at 3,000 rupees. But that was valued at 10,000 rupees. We insisted management, we deployed our technical expert and we had a lot of discussion with the management. Boss, this quality is not exactly iron ore. Then that dispute was going on with the client, with the vendor also, that they wrongly said. I said that is separate part. But since it is in your premises, you have to validate fines. And they made all this adjustment entry. They degrade those inventory.
Aging of the debtors, it is a value, it is a number of days which we report and finish. Our job of reporting is finished. But regarding inventory, a lot of technical things come down, and what to value, what not to value. So this thing, I presume, is a gray area for both of us and the management.
Sir, I'll tell you, that is the reason I requested everyone to please come out with the practice, because the common errors, this is just a presentation. The common errors, we all know what are the common errors, but how to mitigate those errors, that is what the response. Answer to your query, sir, see, primarily responsibility lies with the management. I'll tell you one more example, what sir said with respect to gratuity valuation. We as an auditor, if client gives us the data, ये है, आप इतना का मैंने amount किया because this data was provided by the gratuity. So does it mean our responsibility is over? No. We should be doubly sure that the amount is actually true and fair or not. So whatever audit procedures required, that probably sir will be taking about this, another session with respect to auditing standards on this thing, that how to take all these audit procedures to take into consideration at the time of reviewing the financial statements. So, but coming to one, we have to follow all audit procedures, whatever is required to make sure whether this amount is true and fair. If required, we have to deploy technical person. And if we are not sure, please mention in your audit report by saying that what you feel, you just mention in your audit report. That is what I would suggest to say.
Inventory, it is required that physical verification is to be conducted. Then we have no option but to rely on the management's certificate that yes, physical verification has conducted regularly or with some intervals. So at that time, what is our duty? Because we are auditing after the closing of the financial year.
Yes. So what is your query, sir?
My query is, should we mention that we did not go for this physical verification?
No, but why you want to say we did not went for the client did not allow you to go for physical verification?
Because we are deputed to conduct audit after the closing of the accounting year, and the value is as on the physical closing of the year.
Okay. Okay. So you
So
mean
then
to say
we
maybe you
need to reconcile from the date we are deported for reporting and the closing date. We need to reconcile those figures.
So, sir, yes, that is what exactly I was about to tell you. So, you mean to say probably you might have been appointed in the month of June or July for the financial year of last year, and since you did not went, sir, to my opinion, yes, we have to. We have to, first two things. As an auditor, our responsibility, we should again go and see the physical verification procedure. And we have to tell client to roll back the transaction and derive the 31st March figure. And number three, it is not our responsibility to conduct the physical verification. We as an auditor have to observe the process of physical verification. If you see, sir, in Caro we are saying we have observed. Our responsibility is to see the observer. We are the observer. We never go and do the physical verification process. We are the observer. We tell client, sir, you please be here. You do the physical verification process. We will see the process and we'll take comfort that the process followed by the management for physical verification of inventory is correct or not, is true and fair or not. And yes, last, we have to insist client to roll back those transactions, because I'll tell you, during this COVID scenario, 31st March, lockdown was there. Lockdown tha, sir. Us time this situation came, and institute came out with detailed guidelines with respect to inventories also, where institute also suggested that you please insist client and tell them to do the rollback of transactions. If doesn't, then we have to give appropriate disclosure in our audit report. Am I clear, sir? Coming to AS9, revenue recognition. So, revenue recognition policy. Again, this revenue recognition policy was not disclosed. Revenue was. So, probably what we found, revenue from operation, income from other income, income from services. Material figure was there, but no accounting policy. Nothing was mentioned with respect to income from services. So, we should insist client to see, we as an auditor to see whether company earns an income with respect to dividend, mutual fund or any investment. There has to be accounting policy with respect to that also. सिर्फ income from goods देने से नहीं होगा, income from other sources भी अगर material है, we should tell them to disclose that also as an accounting policy. Construction contract completion method basis was not stated appropriate, because this is very important. I tell you, sir, this in case of this construction industries, it is the policy which probably gives the flavor to us that what accounting entries, what are being done by the management, what are the accounting entries being passed in the books of accounts, whether it's a percentage completion method or what is there. Multiple element arrangement, allocation basis what not explained. In case of joint operations, say suppose I have a joint operation, so this we found an income from joint operations in the standalone books of accounts, but nothing was mentioned in the accounting policy. Then we discussed and then we came to know that okay, there is a joint arrangement between the company and the third party where whatever amount of revenue will be earned, they will share 50-50. So that should have been mentioned in the notes, in the accounting policy, which was not there. This is a disclosure part. Measurement and presentation errors. Gross revenue shown without deducting trade discount returns. You all know. Again, policy also should clearly states about agent versus principal not evaluated. Deferred revenue balance not disclosed as liability in notes. These are the common things. I mean, this was missing. We saw that. We saw the discount was there, lot of things, because this probably you could not find when we do the review as a regulator. But when you are the auditor and when you review the books of accounts, then probably you would be in a position to come to the conclusion that okay, there are trade discounts, so many things are there, but that has not been appropriately disclosed in the notes to accounts or maybe in the financials. Coming to property, plant and equipment. Opening, closing, gross block and accumulated depreciation not reconciled. We all know gross block opening, additions, disposal, gross block closing. Depreciation for the year, accumulated depreciation net. The disclosure was not proper. Schedule 3 gives a specified format for this. कैसे करना है, Schedule 3 ने बताया है. But that was not there. Even in CWIP also, I'll tell you, capital work in progress. The Schedule 3 says you have to disclose the movement of CWIP also. That is also required, capital work. That was also not there. That is there, sir. Even one thing apart from this, management is supposed to disclose the movement of capital work, opening, additions, transfer to PP and closing. That movement was not there. Yes. Yes.
So I asked what is the thing. So they said we have revalued the thing and without capitalization, the value of the capital work in progress has gone down.
That means that aging was not correct. That means that aging was not proper, not done, sir. Then, sir, in that case, we should insist them to revise the previous year figure. Correct, sir. Because, I'll tell you, sir, this is a disclosure deficiency, sir. This is a disclosure deficiency. If aging was not correct, because as you rightly pointed out, coming into fourth year, you find there is a substantial decrease in the CWIP, but addition, you could not find addition. That means the previous year aging was not correct. Then we should insist management that you restate the previous year figures also. Disclosures. Because there is a disclosure deficiency. And standard is very clear. Previous year figures have to be regrouped, rearranged wherever required. And if that figures are so material, then adequate disclosure is required in notes to accounts. As an auditor, to my view, we should give emphasis of matter para, saying that these are, because everywhere you will find the last after, where when normally we signs and management signs, उसके ऊपर एक note देते हैं. Last note वही रहता है ये setting के बाद. Previous year figures rearranged, regrouped wherever necessary. This is a very diplomatic sentence. Wherever necessary. But to my opinion, if company have not rearranged, not regrouped, we are not supposed to give this line item. And if company have rearranged, regrouped, you give. And if it is material, standard says you please go and see that if it is material, like in your case, if it is material, then there is a subsequent disclosure. It is required in notes to accounts that these are the regrouped, rearranged done in the previous year figure also. And if it is material, as an auditor, we should highlight by way of emphasis of matter para, giving the reference of that note. Yes, sir. Thank you. Sir. It was closed. Suspended. Please, could you please speak louder, sir?
Hello.
Yeah.
My question is, one of my clients, that first year capital work in progress is there. Second year, there is another capital work in, same project, capital work in progress addition is there. Third year also, fourth year also. Fifth year when it has come, that work has been suspended. That it has not been capitalized.
Suspended, yeah.
But in my opinion, that should be charged to revenue.
No, sir, that should not be charged to revenue. If it is suspended maybe because of some technical reason or maybe some legal or environmental issue. Could be any of the reasons.
Whatever.
That has been suspended. That has not been,
No, sir, it has been closed. It will not be continued.
No,
further.
then sir, it has not been suspended. It is permanently closed.
Yes, it has-
So nothing is
Or
going to
closed,
happen.
closed. It has been
Then
closed.
it should be charged to revenue.
Revenue.
If it is suspended, we should insist to make a provision for that project.
And now my second question is, suppose if I have charged to revenue, or the client has charged to revenue, whether it would be recognized as prior period expenses or not?
No, not at all, sir. So prior period, so now again, how the prior period comes into the picture? It totally depends on the event which triggered on that period. So in your case, event triggered in the current financial year. This got suspended because something could have been happened in the current financial year. उसके लिए वो आपका ये suspended हुआ था और maybe वो closed हुआ था. If event would have been triggered in last financial year, then what you said, then you would have, I mean, as an auditor, we should suggest them to restate the prior.
Then sir, it should be covered by a note.
Absolutely.
It should be covered by a note why it was suspended.
Nee,
Why it has been
no,
suspended.
That to standard also says that
Yes.
disclosure is required. That MCA 2022 notification came out with a specific that you have to disclose the suspended project. Why it is so required, sir? Because this company is the company mortgage the entire plant and entire thing, and by the mortgage वो लोग loan लेते हैं, sir. They take loan from the bank. And that is for the investor point of view, this disclosure came into the picture. Boss, you please show me the suspended project. We want to exclude from all this thing from that. We want to see, because how we normally the company take loan for the entire project. By way of disclosure, probably this investor or bankers come to know that okay, why this project has been suspended, why it is kept on hold, why there is no movement. So that analysis is because this disclosure have come because of this investor's point of view.
No, actually management wants to give in the management representation, but in my opinion that should be covered by a note.
Absolutely. That is the requirement of the standard also. Suspended project are required to be disclosed separately.
Another question, sir, regarding, I sat behind that another question, that in case of the slow moving items, and you have recommended, and that should be the net realizable value. It should be disclosed as the net realizable value. Now,
No, not for slow moving items, sir. For this manufacturing goods, those are actually dead stock. For net realizable value, that for
no, it
for
is
slow
dead-
moving items, you have to make a
no,
provision,
it is,
sir.
it is a dead stock. There is a almost dead stock.
So that is not a slow moving. Sir, slow moving items, management is required to make a provision. And for dead stock, you have to insist management to bring this inventory to NRV.
Okay. Yeah.
Yes, sir. Mic दीजिए ना, please. Sir, please take mic.
Sir, two queries. One is regarding deferred revenue, wherein subscription of a magazine, say ₹1,000 per month, is collected in advance. So they are issuing a GST invoice, 12,000 rupees ka for 1 year, along with the GST, and it is being recognized as revenue. Ideally, it should be deferred. Your views on it? And second one is with regard to depreciation, though you are yet to come over there. Useful life is left on the management to decide. Now, when we are comparing financials of two companies and useful life, you have to go and read. What is your take on the subject that management is free to determine useful life? Some companies are determining intangibles 3 years, 5 5 years, some are going for 7 years, and then we are moving on to standardization. So your take on this, sir.
So, good question. So, with respect to this useful life, sir, normally what happens, you are absolutely right. You will find one company with their peers having different useful life. Let us discuss what is there in the MCA disclosure. Schedule 2 क्या बोलता है? Schedule 3 says that you follow Schedule 2, or you means the company, or you have a right to take your own useful life with technical assessment. As an auditor, what is our responsibility? When we go and audited the books of accounts, we ask management, these are the cases where you have followed you have done the technical assessment and you have considered separate useful life which is not there in the Schedule 2. As an auditor, our responsibility is to see. So this was one of the common errors which we found, I'll tell you. We saw that they followed this was there in the significant judgment and estimates, because this is the area where it requires a significant estimates, correct? Because we are relying on the technical assessment report. It was mentioned there, but this disclosure, the notes to accounts was silent on that. Nothing was mentioned about that. It was mentioned company follows Schedule 2 or technical or other useful life wherever required. No, that is not the correct. The correct disclosure is wherever Schedule 2 and wherever Schedule 2, these are the cases. Like in plant and machinery, this years. And we as an auditor have to rely on the technical report, yes, but we also have to do our technical assessment that, I'll tell you the example, loader. Schedule 2 says the heavy loader is required to be, the useful life. Schedule 2 talks about, if I'm not wrong, 15 years, 15 or 18 years. But if you see in one of the cases, you will find they've considered 4 years, 5 years. This is something illogical. So we should not only simply rely on the technical assessment report. We should ask them, boss, tell me why you have considered 6 years. Correct? So that assessment is required. But as an auditor, we can't do this. We have to make sure that appropriate disclosure is required to be made in the notes to accounts. Yes, sir. So that should be charged to your deferred only, deferred. No, what was your question? Could you please come again?
GST was collected upfront when the subscription for the entire year was taken. So they are saying कि mismatch हो जाएगा and all that stuff.
GST को GST के हिसाब से चलने देते हैं. देखिए मैं आपको बता रहा हूँ, बहुत कुछ होता है. You must have heard about the cut-off, correct? Revenue recognized on FOB and FOR. Normally you will find on 31st March management has considered revenue, where GST has all been collected, paid, and all this have been done. But when we go and audited the books of account, we say ये तो revenue recognized नहीं होना चाहिए था, because ideally the agreement says revenue should be recognized when it reaches to the ultimate destination. Then what we insist management to reverse those revenue at the time of preparation of the financial statements. Let it be there in the books of accounts. But we have to follow accounting policy. In case of FOR, it says then. And again, accounting policy is totally based on the accounting standard. It is not their wish. If tomorrow client says, no, I want to make this sort of thing, I will mention in accounting policy. If as an auditor, if you feel that accounting policy, prepared by the management is not correct, then also auditor is required to disclose or modify the report also. Please. Tangible assets, intangible assets, capital work in progress, and intangible assets under development also, sir. No. That, sir, वो तो सीवी आपका कभी कैपिटलाइज ही नहीं हुआ था. Had it been capitalized, then would have considered as a part of depreciation. You have to make a separate disclosure that should be charged in the profit and loss account, and appropriate disclosure is required. That's what I suggested to sir, that appropriate disclosure is required in the notes to accounts, that this much amount has been charged to because in so and so reason.
So this and in one box, and in profit and loss account, should depreciation and amortization be separately mentioned, or depreciation and amortization?
That is, I mean, see, in under schedule you can see depreciation amortization. That is not required. In any case, sir, your schedule shows the both a separate figure only. So that may or may not required. Some of the companies you will find they are showing depreciation, this depreciation on property, plant, equipment, on intangible assets. Some of the companies you will find they are showing together. So उसमें कोई फर्क नहीं है sir. Separate schedules तो है ही आपका.
Sir, regarding depreciation, I have one question.
Yes sir.
One of my clients, they are building is 100 years old. But as per the Properties Act, the depreciation schedule, the estimated life of the building should be the 60 years. Now they are covering that, okay, hello.
You said estimated life is 100 years.
Yes. No, actually building is still running.
It's 100 years old building.
Yes, 100 years already covered. But they are charging depreciation considering the estimated life more than 100 years. Okay. Then what? Because they have covered in their accounting policy. They are following it. That my question is that whether it has been technically re-evaluated or not. It has not been technically re-evaluated. It is a government organization, it's a large government organization.
So you mean to, so they are taking depreciation of 50 years?
No, they are taking depreciation till now.
Till now?
It is continuing.
For how many years?
That is
what? How many years? I mean, क्या सर कौन सा years? कितना useful life है?
Around 100 years, and they are continuing. They are taking depreciation.
Okay.
They are taking depreciation, but in their accounting policy, and they have said, and since the building is running, and it has, we are charging depreciations in accordance therewith. And in my previous auditors, but
So what is your question, sir, in this?
my question is that they have covered in the accounting policy, but should it not be covered by in my audit report?
Why do you require to disclose in audit report?
Audit report, because they are not following the Companies Act.
Why, sir? Okay, you said the Companies Act Schedule 2 says 50 years.
Yes.
And they are charging 800 years.
Yes.
So that means, so they must have disclosed, that is what I said, sir, earlier. They must have disclosed in the notes to accounts that this building they have not considered Schedule 2 rate. This is based on the technical assessment report.
Yes.
And if you rely on the technical assessment report, then nothing is required to be
Technical
disclosed.
assessment is not there.
No, sir, then it is not required. Sir,
Yes,
it is
that is-
mandatory.
that is my question.
It is mandatory required.
Yes.
That is what I said. In one of the cases, what I saw in estimation, it was there that some of the cases they have done their own assessment. In that case, as an auditor, we should insist client to please provide us the technical assessment report. Number one. Number two, the standard is very clear. The standard says that you, again, sir will take up that. I don't want to go much in detail. I mean, since the standard says that company is bound to review those useful life at each reporting period. So in your case, if technical assessment report is not there, if they have not mentioned it, then you have to mention in your audit report, sir.
Okay, thank you.
And again, sir, this requires a modified opinion if it is material also, sir. If it is material, sir, yes. Shall I? I think we have covered all your queries. Employee benefits. So what are the disclosure which was missed in the financial statement? The common errors which we found. Actual assumptions, discount rate, salary escalation, mortality not disclosed. As I said, sir, this is something which management is providing. I tell you, this is the area where management can, I mean, see, without unbiased, see, anybody can twist their profit and loss. As an auditor, our responsibility lies here. The escalation provided by the management to the actuary is correct or not. But coming to our case, common errors, what we saw, that company is required to report discount rate salary escalation clause and mortality, which was not disclosed in the notes to accounts. Reconciliation of opening and closing defined benefit obligation was not there. It's very simple. The format is very simple. You have to disclose your opening defined obligation, your past service, amount expensed, your closing, salary, everything is there in the standard. What they are supposed to disclose. We have to just simply see whether those disclosures are there in the financial statement or not. So these are the things which was missing in the financial statement. Components of gratuity expense not split into service cost, interest cost, as I said. So when you go into financial statement, they have to show gratuity expense only. But यहाँ पे उनको separately दिखाना पड़ेगा financial statement में that how much is my service cost, how much is my interest cost. This is separately they have to. So this was missing in the financial statement. Other employment benefit errors, leave encashment, actuarial basis versus proportionate basis not disclosed. Short-term accumulated compensated absence provision basis not stated. So leave, there are two things. Either there is a short-term or long-term. Long-term standard says you take the actual valuation report, accounting आप कर लीजिए. And what is required? You have to require what is based on the actual basis, how much is the amount you have to disclose. No additional disclosure is required in the financials. That was missing, nothing. It was included in your provisions for expenses separately. They should have disclosed separately. Short-term accumulated compensated absences was missing. ESOP fair value method or intrinsic value. In one of the cases we saw the company provided ESOP. The ESOP says there are two methods. Fair value method, intrinsic. Without going into detail, said this is just a disclosure. So the method was missing. So we saw the significant estimates, we saw it was there. We also saw the ESOP disclosure was there, but the method was not mentioned, whether they have done the fair value method or intrinsic value method. This was missing. Coming to borrowing cost, capitalization disclosure omitted. Amount of borrowing cost capitalized during the year not disclosed. This is specifically required to be disclosed, sir. Whatever borrowing cost they are capitalizing, that are supposed to be disclosed separately. Capitalization rate for general borrowing not disclosed. We all know commencement and cessation date of capitalization not mentioned. Commencement date and cessation date. Hello. Classification and presentation errors. Finance charges on lease included without disclosure of segregation. So finance charges which was included on lease, but that was not disclosed separately. Exchange difference on foreign currency borrowings, capitalization portion not shown. You know the concept of para 6C, correct? Para 6C in the accounting standard. Anybody is aware of para 6C, sir? Now in Ind AS it is para 4E. So that disclosure was also made. So company basically took a, company borrowed loan from the outside India. That was on ECB. So probably usme suppose they were paying at 2%. Maybe at a 2% plus LIBOR karke 3% aata tha. And maybe Indian if that loan is coming 8%. The difference they have to calculate instrument wise. The difference between those should be charged to interest from finance cost. From interest to finance. So that disclosure was also missing. The para 6A. It is there in accounting standard that para 6E was missing. This is very much required because we saw that the borrowing, we saw the foreign loan was there. Immediately when we were reviewing those accounts, we identified and we discussed that where is para 6E. Para 6 was missing in the financial statement. Suspension of capitalization during extended interruption not mentioned. This is what, sir, I was talking about. If any project suspension has been suspended of capitalization during extended interruption, that means if during extended interruption not mentioned. So if any project which is being suspended over a period of time, then we should insist client not to capitalize the borrowing cost. We should have to have a reason. We should ask management to have a reason for that. So that suspension of capitalization for extended period was also not mentioned. Related party transaction. these are the basic things which were identified during our this review. Common errors. First, as an auditor, our responsibility is to identify the related party. Again, I don't want to go much into detail, that sir will take on this related party. So entities under common control of KMP's family members not identified. Under common control, all members of KMP are also related party. So we should ask management to provide a list of related party first. So identification of related party is very important. एक बार आपको वो मिल जाता है, फिर transactions मिलना बहुत easy है. Then we have to see whether those transactions have been done with the respective parties or not. सर एक सेकेंड.
सर इसमें एक क्वेरी है, जो रिलेटेड पार्टी का लिस्ट देना पड़ता है, उसमें मैं भी एक फैमिली में 10 मेंबर है, 10 मेंबर के 50 रिलेटिव्स हैं, फिर उसकी और 25 एंटिटीज़ हैं, तो हमको वो सारे नाम देने या जिससे सिर्फ ट्रांजैक्शन हुआ है उस साल में खाली वही नाम देने?
एक बार फिर से बताइए ना क्वेश्चन प्लीज.
सर सपोज एक प्रोमोटर की फैमिली है, उसमें 4 या 5 मेंबर हैं, और अगेन वो 5 मेंबर के रिलेटिव्स और जुड़ गए, इन लॉज भी जुड़ गए, और फिर उनकी एंटिटीज़ भी जुड़ गई. तो मेरे को यहाँ पे जो लिस्ट अपने लिस्ट आउट करते हैं पार्टीशन, वहाँ पे खाली उन्हीं एंटिटीज या इंडिविजुअल्स का नाम देना है जिसके साथ ट्रांजैक्शन हुआ है?
एकदम सही बोले सर. आप जिसके साथ देखिए, एज एन ऑडिटर आपके पास पूरा लिस्ट होना चाहिए कि मेरे को आप पूरा लिस्ट दीजिए.
वो तो हम MRL में ले लेते हैं.
नहीं सर, MRL में मत लीजिए सर, MRL में मत लीजिए.
MVP1 ले लेते हैं
सर. वो ठीक है, आप उसको बताइए मेरे को लिस्ट पूरा दीजिए. प्लीज आस्क मैनेजमेंट टू प्रोवाइड मी द लिस्ट सेपरेटली where we can identify. But as you said is absolutely correct. We should, rather they should disclose only those list of parties where transactions have been done with the money. Otherwise there will be huge number. You just imagine, take the example of Tata Steel.
Right.
Then there will be n number of list in Tata Steel also. Correct. So only those जिसके साथ transactions हो रहा है उसके साथ ही करना है.
तो इसके लिए हम लोग को कोई लिखना जरूरी है क्या कि we have mentioned only those?
आपके सर ऑडिट वर्क पेपर में 100 कंपनी है, उसने 40 के साथ काम किया, आप 40 का दिखाए, तो आप अपने वर्क पेपर में बता दीजिए सर. दैट्स इट. योर जॉब इज ओवर.
He is the general manager, that is the son of the managing director. He is getting salary and perquisite also from the company.
He is a general manager, son of managing director.
Yes,
okay.
He is the general manager of the company, but he is the son of the managing director of the company also.
Yes, sir.
But he is not on the board of directors. Only he is working just as the capacity of the general manager. Then in that case, and that company, is it required and to be shown as the related party?
Yes, sir. Your MD is KMP. Your MD. Entities under common control of KMP's families, members not. Your MD is KMP. Correct, sir? Key managerial person. If his son is working over there, whosever position, sir, may or may not it can be, and if he or she is withdrawing salary, that related party manager.
He is withdrawing the salary as per
absolutely,
the company's
sir.
rule.
It is required to be disclosed, sir. That is what, sir, I am the general manager. If my son or maybe my some relative is withdrawing salary, investor want to know that how much amount of that is the gray area, sir. I tell you, investors see this related party transaction very thoroughly, especially in this case where son X, Y, Z family members is withdrawing salary or with whatever services. Even forget about salary. If his son is giving some consulting services, that also is required to be disclosed.
That is required.
Sir, in that case, the person who is rendering service is doing his own capacity as a professional or personal.
Absolutely right, sir.
So what is the intention of giving?
Sir, the intention is that is what I said, that if you want to tomorrow, sir, if you want to invest, so again, let us discuss that why this presentation is required, sir, why this disclosure is required. To know the investor, by going through the figures, investor won't be able to conclude whether to invest in that company or not. Sir, if you are an investor, if you want to invest in this company, correct, then probably you will find that managing director has 4 sons is drawing salary, which is 2 to 3% of the net profit. Don't you think you will ask management on why they are withdrawing? Whatever. Nothing is harm, nothing is wrong. What is required that if relative is doing something, please disclose in the related party transaction. That is what it is required. So disclosing is something in an appropriate manner as per standard, done my job. That's it, sir. सर माइक ले लीजिए ना अदर
A steel manufacturing company having huge inventory is surveyed by the GST department, BGCI.
Sir, come again, what did you say?
A steel manufacturing company having huge inventory is surveyed by the GST department.
Okay.
And they allege that there is a shortage of 500 metric ton stock.
Okay.
Assuming that there is a sale out of books. And the company under pressure paid 50 lakhs rupees GST without any protest.
Without any protest?
Protest. They paid because they want to settle the issue because they may raise other issues. How to account for and report in the financial statement?
So, has to be charged to profit and loss account, sir.
But the same information will be passed on to the income tax department. They will say that when you paid 50 lakhs tax, assuming that there is sale out of books, their view will be separately, they will charging the same thing under section 68.
Sir, in this case, I have seen the practical cases. In this case, management normally, settle the cases. Bhaiya 50 lakh do, kaam complete karo. But management never says that what you are saying is correct. And in GST, if you pay in this portal, even if you write under protest, but I think there is form, I forgot that form, you have to pay to, GST always said was you are not supposed to pay under protest, you have to give it to me. So as an auditor, our responsibility is if that amount is too material, which affects your true and fair opinion, then we should insist on management, you charge it to profit and loss account, you give a note, reference of that note and give appropriate disclosure in notes to accounts. This includes so and so amount which paid to GST department on account of survey done by so and so. That's it. Our responsibility is over, sir. Let income tax, because you are absolutely right, GST will certainly pass this to income tax authority. Coming to this post-employment benefit funds not listed as related party. If that post-employment benefit is being funded by the company on trust, where the chairman and managing directors are the related party, whatever amount of gratuity or leave transferred to that amount of fund has to be separately disclosed in related party transaction. You can see Tata Steel, Tata Motors, they have their own trust. They disclose separately in their related party transactions also. Fellow subsidiary, step down subsidiary invest. This is, we all know what is fellow subsidiary and step down subsidiary. I am the holding company, I have 5 subsidiaries, that is step down subsidiary. Subsidiary ka bhi subsidiary hai. So if I am doing transaction with my step down subsidiary or maybe subsidiary ka subsidiary, that transactions has to be disclosed. Transaction amount, outstanding balance must be disclosed per party. This is very important, sir. If I am doing transaction, if I being an holding company, I am doing transactions for purchase, sales, for irrespective number of related party subsidiaries or the entire amount transaction during the year and outstanding balances has to be disclosed party wise. You can see Tata Steel doing a transaction with their M Junction or maybe XYZ subsidiary, they disclose the name of the party, transactions and the closing balance. It has to be separately disclosed. Terms and conditions, interest-free loans not stated. Okay. Write off provision for doubtful debt, this is very important. If you write off or make a provision for doubtful debt for any related party transaction, it has to be disclosed in your related party transaction because these are non-cash transaction. बहुत बार ये ओपिनियन आता है, सर I have not made any transaction with them. I sold it to the party, I disclosed last year. I have an outstanding balance, I am going to disclose. But I have made a provision, this is a non-cash transaction. Why I am supposed to disclose in that? But when you see the related party definition transaction, उसमें वो नहीं बोल रहा कि cash or non-cash. Even if you made a provision for doubtful debts or bad debt, with respect to your related party, you are bound to disclose in your related party transactions. Yes, sir.
Payment
Sir, I might be mistaken, I might be not.
Yeah.
But in income tax, it is written payment to related parties.
Sir, income tax is different, sir.
No, just a minute. So over here, shall we disclose payments, receipts, balance, everything? I mean the complete ledger.
No, no. Summary, yes. Transactions. Say if you have made sale, say if I am your related party, you have sold goods to me. You have to disclose sold to Shrenik Mehta, say 10 crore rupees. Then the closing balance is 2 crore rupees, outstanding balance receivable 2 crore rupees. You did not have to disclose 8 crore received, 2 crore, that's it.
And if I have purchased from the same party also?
That both has to be disclosed separately, sir. Netted off is not allowed, sir. Sorry? Yes, sir. Loan transaction also. Absolutely right, sir. Loan, because yes, that is the gray area where I have given loan or you have taken loan. Both has to be disclosed separately, sir. No. This is where, this is not, this is in the notes to accounts. In your schedule 3, वहाँ पे अपने को separately दिखा. नहीं, sir. So basically I have just connected with that. It is also required to be given. Yes.
Sir, I would like to come back to the question sir asked. There's this para 21 is in AS 18 which states that name of the related party and nature of related party relationship where control exists should be disclosed irrespective of whether or not there have been transaction between the related parties. So sir, what does control actually means here? It has been defined in AS, but how do we check that?
Sir, I mean, sir is taking that, session on that.
Sure,
I'm ready to that, but sir will take, in fact, there is an mismatch. I'm just going through the disclosure part, schedule 3, and, sir will talk about the entire common errors in the accounting standards only. So that sir will take that. But I'll tell you, control word is very important. And again, coming into Ind AS, it is very important. I'll give you one line. If I am holding 1% in X limited, but if my control is there, तो भी मेरे को उसको consolidate करना. That is what the word control. Sir will take you through all this thing. So again, this is over. Deferred tax disclosure. Nature of each component of DTA, DTL not explained. Sir, DTA, DTL, nature of component. In notes to accounts, we have to disclose. We should insist client to separately disclose the nature of each item. 43B, deferred tax, not itna mera DTA, itna mera DTL, and this shows. Nature of each item should be disclosed separately. That is what. Movement in deferred tax balance not reconciled year on. This is very important. Standard says in notes to accounts, nature and component of deferred tax assets and movement of deferred tax item. Each and every line item. Opening, how much we have created, how much recognized, how much transferred, de-recognized, and what is the closing. That movement is required. But in 43B, you are not separately supposed to disclose all items of 43B. Just mention 43B items, disclose this thing. Just mention this DTL, this your fixed assets PP, the broad head. But yes, that is required to be disclosed. DTA recognized on carry forward loss, evidence of certainty not stated. This is very important, sir. We all know that. There is a difference in AS and Ind AS. AS, I suppose, still requires virtual certainty. Ind AS is liberal, that requires reasonable certainty. So if your client is recognizing deferred tax asset on business loss and say AS client hai, to usko boliye mere ko virtual certainty diye. Because and what is virtual certainty? That loss ke upar jo deferred tax un log carry for recognize kar rahe, they are going to reverse. They should have a virtual certainty that they are going to earn huge profit in coming years, which they will de-recognize those DTA. That is, it is very important. And if in your case, what was missing? The note on deferred tax was missing. Virtual certainty. This is where, and as an auditor, it is our responsibility to see the virtual certainty. Current tax disclosures. Reconciliation of effective tax rate to statutory rate. This is very important, sir. I'll tell you. If you reconcile this figure, that means your accounts number is more or less correct. I'm sure everybody knows this thing. If you reconcile this thing, effective tax rate, and What is my effective tax rate? Anyway, we'll not discuss much on that. I'm shortage of time. I'm half an hour late. I have to close my session at 4 o'clock. I have just 30 minutes. Anyway, this effective tax rate to statutory tax rate. So this is also required to be disclosed. Standard says you have to disclose this in notes to accounts. MAT credit entitlement and utilization properly explained, not properly explained. MAT credit utilized, but note was absent. Nothing was mentioned about MAT. Standard, see, you can go through this deferred tax. The disclosure says that how you have to disclose this. What are the notes you are supposed to do. You can see n number of annual reports. You will find these disclosures are there. No disclosure of contingent tax liability for pending assessment. So what happens, sir? I mean, this is again when I was doing the FRRB review, what I found during my FRRB, one of the financials, we saw in significant judgments and estimates, they mentioned about the contingent liability, but their contingent liability was not there. Nothing was mentioned. So either something they forgot to mention in contingent liability, or maybe that note is not correct. Something was missing. Sir, कंपनी का जो टैक्स है सपोज 25% आता है and effective tax rate, suppose we know effective tax rate, so it is coming 22%, then we have to give reconciliation of 3%. Then what is that 3%? Either there is a permanent difference or temporary difference. Temporary difference having both impact in deferred tax and income tax act. There are permanent difference which have not been recognized in either of the cases. That needs to be reconciled to derive at your effective tax rate. This is mandatory in all cases, sir. I suppose, yes sir, it is mandatory, na? Mandatory, na sir? हाँ. Sorry? Sir, yes. हाँ, ये accounting standard के लिए अपने discuss कर रहे हैं. Our today's session is only restricted to accounting standard. We have not gone into Ind AS. Yes, this is. You can see. I'll tell you. You can even Tata Steel was under Ind AS, correct? You can see your prior under IGAP also. You will find this effective tax rate. This is the. Oh, okay. Okay. But you can see this is very interesting. If you come out, see, you just ask client. This is where probably you will come into the position that जो भी उसने income tax लिया है वो 100% करे. This is just about the permanent difference. What is the permanent difference? Deferred tax. See, again, okay. Just take 2 minutes. आप कुछ भी देखिए, कोई भी income tax लेते हैं उसका corresponding effect deferred tax में आता है. Correct? ये जो डिफरेंस होगा ये परमानेंट डिफरेंस होगा. इधर प्रोबेबली यू विल नॉट फाइंड इन डेफर्ड टैक्स और यू मे नॉट फाइंड इन इनकम टैक्स. आई टेल यू वन ऑफ द रीजन. एनी पेनल्टी you add back from computations, but that will not come in deferred tax. So that is a permanent difference. So you have to identify the permanent difference from computations, or maybe something is missing, not considered in the computations. And if your effective tax is correct, that means your income tax is correct. Coming to provisions and contingency, provisions disclosure, opening and closing balance movement not shown as per provisions. This is mandatory, sir. The movement of provisions is required to be disclosed. Movement of provisions, sir. Opening during the year, transferred and closing, sir. Again, probably, some of the, maybe when I was, taking a session in one of the seminar, मेरे को एक क्वेश्चन है, सर हम तो लास्ट ईयर का भी प्रोविजन दिखा रहे, इस बार भी दिखा रहे, मूवमेंट तो है, व्हाट इज रिक्वायर्ड? मूवमेंट आपको तो पता चल ही जाता है. लास्ट ईयर इट वाज 100, इट इज 150 हुआ होगा. सेड नो सर, 100 वाज फॉर ओपनिंग, कुछ एडिशन आया होगा, कुछ रिवर्स हुआ, देन क्लोजिंग इज 150. यूजर वांट टू अंडरस्टैंड दैट हाउ मच प्रोविजन यू हैव रिवर्स्ड. इज इट समथिंग यू आर एक्यूमुलेटिंग ओनली? Is it something? So by going through this movement, if that disclosure, probably user will be able to identify that okay, provisions हट भी रहा है, नया खाली create नहीं हो रहा है, या सिर्फ create हो रहा है, हट नहीं रहा है. That something professional skepticism that is required. by showing. See, all disclosures have their logic, I'll tell you, sir. This accounting standard, Ind-AS disclosure, Ind-AS, we are not going into details, sir. Our today's session is restricted to accounting. This sir will take up on accounting standards, auditing standards and all this thing. Everything has its their own purpose, I'll tell you, sir. Sorry? Sir, as an auditor, see, regulator expects to review the disclosure. And if we review the disclosure and if we confirm that those disclosures are correct, then probably it is useful, that entire bunch of financial statement is useful for the investor, for the investors, those who want to invest in that company, sir. Or maybe for the borrower, the lenders, those who want to lend to that money. Sir, mic de dijiye na. What comes under?
S29.
हाँ.
Provision क्या क्या होता है?
नहीं, हर प्रोविजन अपने प्रोविजंस वाला जो शेड्यूल्स होता है सर, उसमें मूवमेंट ऑफ प्रोविजंस इज रिक्वायर्ड. AS29, everything comes under AS29, sir. If it is a provision, if you are using the provision, whatever balances you are transferring into the provision, correct, which is the word provision is there in the schedule 3. That moment is required to be disclosed in your notes to accounts. Sir, mic ले लीजिए ना, पीछे सर.
One company has invested in the equities of the equities. Hello.
Sir.
One company has invested in the equities, listed companies, all are listed companies. But at the end of the 31st March, that cost of that share has been reduced drastically. Therefore, as per the standard, that we should make the provision. Then suppose next year, that particular provision may not be required. That in that case, is it be required in the disclosure?
No, that never comes routed through provision, sir. That routed through investment to investment, sir.
No, I have made some provisions.
But that provision is not as per AS29, sir. That provision is as per accounting for investment, sir.
Yes, yes.
So whatever provision you make as per provision. Now, sir will take up this AS29, sir. I mean AS20. No.
No.
Maybe taking that example, it is.
It is an example.
It's an example, sir. He's saying that sir, temporary cost to NRV आया, sir, उसने कर दिया. Let us presume that what he's saying is correct. Based on that, he's basically referring to that whether, is it required to disclose in that? No, it is not required, sir. Only those provision which is routed through AS29, sir. AS29 talks about contingent liability and provision, sir. Provision for expenses and all these things, sir. Provision for accruals and all these things, sir. Those should be routed through here.
Okay.
Am I clear? Pending litigations, claims not quantified. Guarantees given on behalf of subsidiaries, associate not so on. This is very important. So, if I being a holding company giving guarantee to bank on behalf of my subsidiary, that boss, you give this loan to bank, I am there. I am giving letter of comfort. That disclosure is required to be there in the notes to accounts. This is very much, this was missing. Any pending litigations. So, in contingent liability, what we saw, the company gave the pending litigations, but they did not quantify it. If it is not quantified, then company must report because of why reason? Because of so and so reason, the amount is not able to quantify it. That is required to be mentioned. That was missing over here. Remote versus possible, classification not explained in note. This is very important. Yes, sir.
अभी तक कोई ऑर्डर नहीं आया, कोई कंपनी ने कुछ भी पास नहीं किया, इनकम टैक्स ने कुछ भी ऑर्डर नहीं दिया उसका अभी तक, क्या टैक्स लायबिलिटी आया, कुछ भी नहीं दिया उसका, तो उसका इम्पैक्ट कैसे डिस्क्लोज करेंगे?
सर्च हुआ था क्या?
नहीं, इनकम टैक्स रेड हुआ था.
तो देखिए, अगर वो सर्च हुआ तो कारों में अपने को डिस्क्लोज कर देना, वो सर्च का जो आया है उसमें, सर्च एंड सीजर. अगर उसमें भी नहीं आता, इफ दैट डजंट फॉल, से नॉर्मल रेट हुआ, से फॉर एग्जांपल taking hypothetical, then you disclose in your contingent liability, we should always insist them, and company is waiting for the final assessment order, waiting for the order to come. Because if that search happens, we should insist client to mention it, and that is not quantifiable. So that is the reason. You only gave the reason, na? Because of they are waiting for the final order. Because of so reason, the amount is not quantified. So that is what it is mentioned, that if you are not able to quantify, that reason should be mentioned over here. Understood? Yes.
सर एक कंपनी है, वो एक पार्टनरशिप फर्म में पार्टनर है, नॉर्मल पार्टनरशिप फर्म, नॉट एन LLP. अब उस पार्टनरशिप फर्म में डिस्प्यूट चल रहा है, लीगल केसेस चल रहे हैं, तो इस कंपनी को उससे रिलेटेड पॉइंट्स इसमें डिस्क्लोज करने पड़ेंगे क्या कंटिंजेंट लायबिलिटी में?
कंपनी की सब्सिडियरी है क्या पार्टनरशिप उसमें?
हाँ, 40% इंटरेस्ट है पार्टनरशिप फर्म में, और उस पार्टनरशिप फर्म एक प्रोजेक्ट डेवलप कर रही है, जिस प्रोजेक्ट में टाइटल डिस्प्यूट है, जिसकी वजह से उस पर बहुत सारे केसेस आ रखे हैं. तो ये जो मेन कंपनी है जो इन्वेस्टेड है उस कंपनी में, 40% इंटरेस्ट है उस LLP पार्टनरशिप में, उसको अपने कंटिंजेंट लायबिलिटी में वो डिस्क्लोजर करने पड़ेंगे क्या?
नहीं, स्टैंड अलोन में नहीं होगा, बट व्हेन कंपनी इज प्रिपेयरिंग देयर कंसोलिडेटेड फाइनेंशियल स्टेटमेंट, टेकिंग द प्रॉफिट ऑफ दैट पार्टनरशिप, and if you are the auditor of that partnership firm as well as this holding company, you should insist them to disclose all disputes in their contingent liability.
बट सर स्टैंड अलोन में क्यों नहीं होगा? क्योंकि उस कंपनी की प्रॉफिट तो हिट होगी, अनलिमिटेड लायबिलिटी है.
सर देखिए, आई एम द होल्डिंग कंपनी, you are my partnership firm, sir. Somebody else is the auditor. Sir, I am the holding company. My standalone is not impacting anything. Sir, my investment is impacting on the amount.
नो सर, अगर वो लॉस ये हो जाता है, क्रिस्टलाइज हो जाता है, तो मेरा स्टैंड अलोन भी हिलेगा उससे.
नहीं सर, वो होगा ना. That is the reason. That is the reason I am saying that should disclose in their notes, because that is purely relating to subsidiary. Taking the same example, if something goes wrong with that subsidiary, company doesn't disclose in the holding company.
Say it is 10% interest. अपने सब्सिडी एसोसिएट छोड़ देते हैं, 10% इंटरेस्ट है जहाँ कंसोलिडेशन नहीं होगा.
हाँ जी.
उस केस में
कंसोलिडेशन नहीं होगा क्यों?
10% इंटरेस्ट है ना.
Oh, only interest is there.
हाँ.
Then you have to disclose. If you are not, see, the idea is to disclose in the financial statement, correct? Is it? If it is 10% holding, like you take same example in case of joint control entities. Joint control operation, rather operation in JCO, I being an holding company, I being a standalone company, correct, have a joint control operation of where 6-7 areas. You can take example of Indian Oil. They are working on 37 to 40 oil blocks, and they take all profit and loss of that joint control operations in the standalone accounts. If something wrong happens with that company, or if any significant event happens in their blocks, they report in the standalone. So answer to your case, yes. Coming to schedule 3 errors. So this, from here we are completing disclosures per se accounting standards. Coming to schedule 3. Division 1, we all know the balance sheet format, PL notes to accounts. This amendment, 2021 amendment, which came aging schedule of trade receivables and trade payables. We discussed this thing, correct? Which is required. Disclosure of transaction with stock of companies. Very important, sir. Again, this is a gray area, sir. Not to discuss much on that. Either we should, that probably auditor will have to judge how to, go about with this stock companies. Client jo deta hai, wo maan le ke kaise kare. But yes, we should have an appropriate document work paper with respect to stock companies. Client ne bol diya stock companies hai, to apne ko isme sara apna paas procedure hona chahiye. CSR obligation and shortfall disclosure with reasons. There is a mandatory disclosure in schedule 3, that CSR obligation. If I being a company have created my own trust and having an agreement that in any case, if any shortfall happens in that trust, then I will be responsible to compensate those things. And if I have done so in the financial year, that schedule 3 expects to make a disclosure with reasons that I have compensated that, correct? So that was missing in here. Details of Benami property held. We all know. Ratio analysis, 8 mandatory financial ratios with year-on-year comparison along with reasons. So all these thing amendment comes in MCA 2021 amendment. We all know this. These are the additional disclosures, sir. सर एक माइक ले लीजिए ना सर, इज गिविंग।
Hello.
Yes, sir.
For additional requirement, if there is no property, then that should be mentioned as there is benefit, or we can.
I didn't get you, sir.
If there is property, there is no benefit property. Suppose, then mention that benefit property is no benefit
Yes, sir.
property.
Yes, sir.
Or
So no, absolutely right. So this basically, so this confusion came when this first year amendment came. So most of the company did not disclose anything. Correct? No, sir. This happened, and then auditor said disclose करिए. बोले सर मेरे पास है, मेरे पास बेनामी transaction है, मेरा search and seize नहीं हुआ. Why should I disclose? Why should I give a affirmative state there is no benami property? Then lot of things discussed. We discussed in this forum also, and then finally we come to the conclusion. Irrespective there is no benami property. Let management, why it is important, why it is so required, sir? Because at the same time, all this declaration, keep aside this and the all this declaration, we are certifying in Caro also. You can see, sir, whatever amendment come in 2021, same amendment का sir disclosure Caro में भी आया था. तो we as an audit should always insist client you write if there is no benami property. Because they are giving declaration, let them give in MRL also, but let them give in financials also. Then we will give in our Caro that as informed by the management there is no benami transaction.
then that should be a part of FS.
Yes, sir. So coming to 2022 amendment, details of cryptocurrency, virtual currency holdings. If companies dealing in any cryptocurrency or virtual currency holdings, this is very important. We are not discussing in audit procedures, but simply taking MRL will not help our purpose. Because this is, even anybody can, start dealing in this virtual currency. Even you and me also, correct? So we should have appropriate work papers. Simply taking MRL will not serve our purpose, sir. Whether companies dealing in cryptocurrency, virtual currency, we should be doubly sure. We should know what audit procedures we are supposed to follow in this thing. Details of undisclosed income surrendered during search. That quarterly return statement filed with banks accounts to books. This all things we are certifying in Caro also, as well as management is also disclosing in the notes to accounts. Utilization of borrowings from banks. FI for statement purpose. Title deeds of immovable property not held in the name of the company. Any title deeds of immovable not held in the name of the company. Company will also have to disclose in their notes, and we also have to disclose in Caro. Yes, snatch, true, sir. Common classification and disclosure as with respect to equity. Share capital, reconciliation of shares outstanding at the beginning and end not shown. Simply disclosing paid up capital, subscribed capital, so and so will not serve. Mandatory disclosure is there in schedule 3, which company will have to have disclose everything. The movement of share capital, opening and closing, rights, preference, any restrictions on that shares, any bonus issued, right issued, anything. Bonus, I think that requires 5 years disclosure if I'm not wrong. Shareholding 5%, name, percentage, everything is required to be disclosed in the financials. Aggregate number of shares allotted as bonus, bought back in 5 years. These are the mandatory disclosures which are required to be there in the notes to accounts. Yes, sir.
There is another point which says that movement of shares held by the promoters. Movement of shares held by the promoters last year and this year. In maximum of my companies which I audit, the promoters have sold out and moved out long time back. And
moved out and sold out, but still they are disclosing.
no, they are saying such and such promoter's name, nil, 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 nil.
No, but there is no required to disclose.
That's what my question is, because what I feel is regarding this disclosure thing, all the things which are written over there is to be disclosed and written as nil.
Does it mean that they want to show the name of the promoter? Let them show the name of the promoter, but this disclosure is not required. If they have sold out their shares long back, and if last year and current year is nil, then कोई दिखाने का दरकार नहीं है, sir. आप उसको नेम ऑफ द प्रमोटर देख लीजिए सर, उसने जो आरओसी में फाइल किया है, whether those name is tally with the name of the promoters, let them show the name of the promoters, otherwise it is not required.
And that is finished. I mean,
Yes,
it's
sir,
not
yes.
required.
Not required, sir. Because the purpose is that if I being a promoter, what was my last year holding, what is the current year holding, whether I have done any transaction or not. Because again, if it is a listed company, again for Ind AS mein aayega, then any transaction promoter is doing, that has to be informed to the SEBI also. So these everything is linked somewhere or somehow it's linked. You have to inform to the exchange also. So coming to this fixed assets investment, assets held for sale not reclassified from PPA. This is very important, sir. Under accounting standard, assets held for sale. Under accounting standard, prior to that there was no separate. In accounting standard, I think the para is there, sir, with respect. Under Ind AS there is a separate Ind AS is there with respect to, sir. Yeah, this only para, but this is very important, asset held for sale. I mean, most of the company does this mistake, you know, I mean, assets held for sale. If you feel so that these assets are not supposed to be there in PP, then you should insist client that you please classify those as assets held for sale. That means from non-current to current. Investment quoted market value versus carrying value not compared. We discussed goodwill on consolidation not tested for impairment disclosed. This is very, very important, sir. Irrespective, we should always insist client to have a impairment testing report with respect to goodwill. आप testing तो करिए, if because this indicators, if indicators are there, these are supposed to be there. This was not there. CV paging, we discussed, sir. First year, 2 year, 3 year, we have already discussed all this thing. Trade receivables, aging of trade receivable with amounts outstanding for more than 6 months. We have. I am sorry, this is ECL comes to this in days, but here this provision comes. Basis not disclosed. Cash and cash equivalent, restricted cash. Sir, this is there in Ind AS. I think this was wrongly not for. This is again what we make a provision, sir. Normally, if company is making any provision with respect to doubtful debts, so they have a buckets of aging, correct? So they say, okay, if you don't recover this amount, then you make a provision based on some estimates done by the manager. 5%, 10%, 15%. So that amount is required to be disclosed. Absolutely, sir. तो आपको वो disclose करना notes document, so that was not there. Cash and cash equivalent restrictions, cash not separately disclosed. Under cash and cash equivalent, if you have a restricted cash balance, that should be disclosed separately, sir. Under margin, any FD with margin money or आप बैंक में दिए होते, sir, that should be disclosed. That was not appropriately disclosed. Security deposits classified as other assets instead of loans. Oh, sorry, sir. Again, this is Ind AS. My apology. Actually, I am getting mixed. Under Ind AS, sir, this has to be classified as loan security deposits. Under AS, we are showing it other because there is no concept of loans. Borrowings and current liabilities. Current versus non-current, split long-term loans not done correctly. Secured. So this basically, if you have any borrowings, the terms, repayment schedule, the synopsis of the agreement. Certain things are mentioned in Schedule 3 that are mandatory to be disclosed on the footnote of the borrowings, which was not disclosed. Repayment period, due to MSME supplier, 45 days not separately classified. MSME requires a separate disclosure. It has to be segregated from trade payables, which was not disclosed separately. This will disclose revenue presentation, gross, other operating income mixed with revenue from operation. This has to be disclosed separately. Sale of services and sale of goods not separately shown. Everything was classified under revenue operations, sir. This was amortization of intangible. This we have already disclosed all this thing, I think, sir. Employee benefit, ESOP we discussed. Other expenses, yes. Payment to auditors not separately disclosed. This is, we should insist them, please show it separately. Whatever may be, but standard is very, Schedule 3 is very clear. That has to be disclosed separately by way of note. Payment to auditors. Expenditure on CSR, gross amount through implementing agency. Expenditure on CSR, whatever expenditure we are showing, that has to be disclosed separately. If any company is incurring expenditure on CSR, that also required to be disclosed along the notes with respect to CSR. Donation to political parties. Under Companies Act not stated. Donation, if company is making any donation to political parties, that has to be disclosed separately. by way of note. Finance charge, bank charges clubbed with interest expense, not permissible, sir. Bank charges, these are the common errors, sir. These probably you will be able to identify when you do the audit in detail.
Sir, is it
Sir.
given any amount is paid for political souvenir or advertisement? Political party, they are not donating, but somewhere they are assisting.
Sir, if you then, I mean, if you feel so, I mean, actually this is given to political party only, correct? Say for any XYZ political party, अगर उनको ही चेक दिए है सर तो वो political party है, and if he has given ठीक है आप वहाँ पे दे दो for CSR expenditure, then that is a CSR, sir. Directly उस account में hit होना चाहिए sir, political party.
Some XYZ political party souvenir and huge amount. It's
That
not in the form of donation.
Better to be disclosed, sir. Better to be disclosed.
तो मेरे advertisement expenses में तो ही रहता है.
नहीं सर, आप किसको दे रहे? टू थर्ड पार्टी वेंडर को दे रहे हैं, फिर किसको दे रहे हैं सर? Any sir. These are very, these are gray areas, sir. But to save our hands, we should insist them to disclose, sir. It's see again this depends on case to case basis. If it is given for sovereigner, if what he said, if there is a smell of donation, then it has to be shown as a donation. So better you disclose now, let them show as an advertisement. And you said this includes, advertisement includes so and so expenditure, so and so, so and so. Sir, MCA आपको पकड़ेगा तो क्या बोलेगा? आपने खाली disclosure आपने बता तो दिया था ना. Let the regulator decide. These are gray area. Just to save our hand, better to disclose by way of notes. Other expense, okay, finance cost, bank charges clubbed with interest expense, we know. Unwinding of discounts, these are okay, these are not required. Exceptional items not disclosed, classified as before tax. EPS basic and diluted. We should know this. Lot of company does this mistake. This diluted. Standard says, sir will take you through that how to disclose, how to, calculate the diluted EPS, sir. This is very much required. Even in case of additional contributions or buyback of shares or bonus shares or right issue of shares, you have to, in some of the cases, you have to restate the previous year EPS also. Corporate information basis, as we said, that company's nature of business and place of registration is required. These are mandatory requirement as per Schedule 3. Schedule 3. Statement of financial statement with Companies Act and applicable is reporting period and currency. Explicitly stated, you have to mention the reporting period and currency which you are using. Currency, going concern assumptions, key sources of estimation, uncertainty identified, critical judgments, we discussed about this thing. Management assessment on going concern. Let management say in their notes that about going concern. Then our audit report will talk about on the going concern. पहले उनको बोलने दीजिए. Fair value hierarchy of financial instruments. This is not applicable again in days. This there. Loans and advances. Loans to related parties. We know that. Purpose, security, we also disclosed. Loans to directors, officers, company. Whatever amount we pay to the related party, if we are showing that amount separately in the financial statement, there has to be a note with respect to that amount paid to related party. Specific terms should be mentioned over there.
Officers of the company,
Yes, sir, including officers of the company also. Yes, sir. What officers? Anything, sir. Even if I am giving any officers, means all employees of the company, sir. All employees, sir. All. Because initially thought of that officers be any directors and they are bifurcated. Even if you give loan to officers, that also required to be mentioned, sir. This is not there, sir. Sorry. Okay. These are all in days things I have covered. Okay. So MCA, this we have discussed in the effective financial year 2021. The trade receivables, the aging is required. Data accuracy, outstanding balances bucket by invoice date. Okay, we know that aging should be disclosed from the due date, not from the invoice date. Correct? So this is very important. We should be doubly sure that aging जो उन लोग client दे रहा है, whether it is from the due date or not invoice date. If it is not, then you mention the facts. There could be probability. I have seen in most of the companies where due date is not possible. Where? Because they don't consider a due date. They mention in the invoice 45 days. But they normally, this aging comes from the invoice date only. Then we insist client, you please extract it from the Excel sheet, minus 45 days and uske baad tum report do aap mere ko. Then this aging will come from the due date. Credit note balance is not netted off from the respective bucket. Disputed, undisputed classification not done from legal commercial angle. These all know. MSME creditors not separately identified from other creditors. Advance to suppliers shown in payable aging tables. Credit balance in debtors not reclassified to payables. You know this. Ratio. These are the ratio. Again, the standard says, in case the percentage goes up or down by 25%, then reason should be mentioned. In most of the, we saw that it was, somewhere it was copy paste. Very vague statement. Was we should always say this. See, there is a reason for this. If you see if it is go or up by 25% minus or plus, we should insist management to give a valid reason for this. And it is our responsibility as an auditor to vouch those reasons also. Because we have done the audit. We should know better than other knows. We should know the company, why it has gone up. Because this is something, this is the primary thing which we do at the time of analytical review of all the balances. So we should vouch the entire balances also. So again, the key takeaways, disclosures are not negotiable, sir. Not negotiable. Every accounting standard contains specific disclosure requirements. Incorrect numbers can sometimes be revised. Non-disclosure is a standalone compliance failure, sir. It is a non-negotiable. It will only attract to the penalty. Regulators are behind us. We know all these things, sir. Schedule 3 has changed. Stay updated. They are coming with so many updations, so many disclosure. One thing which I forgot to mention here, some of the disclosures, I mean, though, whether that is relating to AS or sir, in Ind AS, they have come out with disclosures which is effective from the next day period and something. Is it relating to AS also, sir? No, sir. So, Schedule 3, we should stay updated. We should update ourselves wherever MCA comes out with circulars. We should be doubly sure. I would suggest, please refer good companies' balance sheets where you can, update ourselves also that how they are giving disclosures, how they are showing the disclosures. Audit trail starts with note. We all know audit trails. Checklist approach preparer. As I said in the beginning, sir, we discussed disclosures relating to financials, accounting standard and Schedule 3. See, even if you qualified, even after so many years of service, we are handling a lot of things. How would we know that जो उन लोग ने दिया है वो सही है? So how to come out with this thing? The only solution is that please prepare a checklist and make sure that when your team are doing this audit, we should be doubly sure कि खाली tick नहीं होना चाहिए whether those disclosure has been done or not. Preparing a checklist and vouching that checklist basically will save everyone from this common errors in financial statement. We will be doubly sure that company has disclosed all disclosures which are required to be disclosed in the financial statements. So I think checklist approach is very robust approach I have seen. The penalty and reputational consequences, we know that any false information will attract a criminal penalty. Anything can happen, see, anything can happen. Because they are taking lot of informations, Benami transactions, search and seizure, now cryptocurrency. These are, Benami एक अपने में एक अलग act है, Benami act है. Sir, I don't want to discuss. So just by saying that company ने बोल दिया Benami नहीं है and we write Benami नहीं है will not help us, boss. If something goes wrong with that company, I am sure they will come and raise hand. That boss, why you have disclosed? No, we can't say just अरे company ने कहा मैंने नहीं किया. What audit procedures you have followed? Then please penalty and reputational consequences. Thank you so much. Thanks. Any question? We'll take just 2 minutes. Any question if you have 2 to 3 minutes. Huh. So we'll take 2 minutes. See, LC payable जो होता है ना, वो recourse और non-recourse होता है. Correct? It depends on the recourse and non-recourse. If it is recourse, if that liability comes on you, so it depends on recourse and non-recourse. अगर वो recourse है कि non-recourse है, उस basis पे you have to take a call whether it should be disclosed as liability or borrowings or trade payables. So identifying recourse and non-recourse is very important. नहीं, this is LC, already LC done. This books में recognize हो गया, वो वाला सर. Thank you so much. Thank you so much.
Thank you so much, sir, for such an insightful deliberation of our today's seminar topic.